Hello guys. Today we're breaking down a major update that many of you have been waiting for, the official delivery numbers for November. While the results are still strong on a year-to-year basis, there's definitely a shift happening underneath the surface, and that shift is tied directly to the sudden removal of key subsidies. This unexpected policy change has disrupted sales patterns, pushed consumer decisions into uncertain territory, and created problems for multiple EV brands across China. And even though NIO remains one of the strongest companies in terms of brand loyalty and premium positioning, this month's delivery data shows just how significant the impact of that policy shift really is. So sit tight, we're about to break down what these delivery numbers mean, which models are thriving, which ones are struggling, why customer behavior swung so sharply, and what NIO must do in December to stay on track for its quarterly targets. This is not financial advice. Please do your own research. November's delivery data is finally out, and the overall number sits at 36,275 units, which is a decline from October's 40,397 units. It's not a massive collapse, but it's still a noticeable step down during a period when deliveries traditionally spike. Despite this, the figure remains relatively healthy considering the shockwave caused by subsidy changes. Let's break it down model by model and brand by brand. Within the NIO ecosystem, the core NIO brand delivered 18,393 units, marking a slight improvement driven largely by the ramp-up of the ES8. The ES8 continues to be a stable and fast-growing model because it sits outside the impact zone of the subsidy removal. According to the company, models like the ES8, ET9, and Firefly vehicles do not lose eligibility under the revised subsidy rules, and that protection is proving extremely valuable right now. On the other hand, the ONVO brand is clearly feeling the pressure. ONVO recorded 11,794 units, which is a mild drop compared to the previous month. The L90 had been performing incredibly well, but the elimination of subsidies hit its segment harder than most expected. Now it appears that potential buyers are delaying their purchases to either reassess their budgets or wait for updated versions. Firefly, however, continues to be a bright spot, with 6,088 units delivered. This brand has been resilient month after month, and November was no exception. Even with all the noise in the market, Firefly's affordability and impressive specs maintain its appeal. Looking at NIO's peers makes the picture even clearer. Xpeng also reported a month-over-month decline, and the timing lines up directly with the subsidy cancellation. Meanwhile, Li Auto saw a small increase, but the gain doesn't tell the full story. Their range-extended vehicles have been losing momentum all year as pure EV technology becomes more mainstream. Meanwhile, Leapmotor delivered standout performance yet again, continuing its surge with record numbers. This is the biggest indicator that the market isn't slowing its shifting. Now let's get to the real issue, the impact of the subsidy removal. Before the guidance was officially lowered, expecting a 50K unit month in November wasn't unrealistic at all. It would have lined up perfectly with the original projection of 150K units for Q4. With the idea being 40K in October, 50K in November, and 60K in December. But when the guidance dropped to the 120K to 125K range, it suggested that each month would need to consistently sit around 40K units. Falling short of that mark means the company is now fighting uphill. The CEO himself warned that the subsidy removal would have a real and unavoidable impact, and we're now seeing exactly what he meant. People have been asking, didn't NIO have demand booked through April? Yes, demand does run through April, but only for the ES8, which is unaffected by subsidy changes. That protection does not extend to the rest of the NT 2.5 lineup. Most of the other models, especially those still built on the older 400-volt platform, are directly impacted because customers are now waiting for the transition to the more advanced next-generation platform. The truth is simple. Customers want 900-volt vehicles. That's what makes the ES8 so attractive right now. It's future-proof. It has higher efficiency, better charging performance, and valuable structural advantages like a large frunk, which the current ES6, EC6, ET5, and ET5 Touring simply do not have on the 400-volt system. I've spoken to many NIO owners and fans, and they all ask the same thing. When is the 900-volt version coming out? Even if some people say the upgrade isn't a big deal, the market has already spoken. Consumers prefer the newer architecture, and they would rather wait a bit longer than commit to a soon-to-be outdated version. This explains why ONVO L90 demand, previously sky-high, suddenly saw friction. It also explains why mid-October became the unexpected peak season, instead of a big December rush, which is what normally happens because consumers rush to beat subsidy deadlines. The removal triggered panic buying much earlier. People rushed in October because they didn't expect subsidies to disappear so abruptly. So right now, the delivery landscape is being shaped by two strong performers, the ES8 and Firefly, while the ONVO brand and several NT 2.5 models are under heavy pressure. To hit even the 120K unit target for Q4, NIO needs to deliver at least over 45K units in December. It's doable, but it's not easy. The company's most realistic strategy will involve aggressive promotions for all 400-volt vehicles. This means extra swap vouchers, significant freebies, extended privileges, and possibly fast-tracked limited editions of models like the ES6, EC6, ET5, and ET5T. These special editions historically boost demand quickly, but they need to launch and begin deliveries immediately. If they're delayed, the December target becomes very challenging to reach. On the positive side, the ES8 production ramp is still accelerating. December should show even higher ES8 output, and this model alone could bring in a large chunk of the numbers needed to recover. But relying only on the ES8 is not enough to hit quarterly goals. The rest of the lineup has to move, and that's where promotions become critical. This leads us to the profitability outlook. Unfortunately, this is where reality hits hard. With deliveries trending downward instead of upward, and with heavy discounts likely required to stimulate demand, Q4 profitability looks increasingly unlikely. It's still technically possible, but the chance is very slim. If NIO does manage to reach profitability, it would be a huge achievement under these conditions. However, the subsidy shock has completely reshaped the final quarter of the year in ways that even the company didn't anticipate. In short, November's numbers highlight a clear divide within NIO's lineup. The ES8 and Firefly continue to shine brightly, proving themselves immune to the subsidy shock. ONVO and the 400-volt NT 2.5 vehicles, however, have taken a noticeable hit as customers pause their purchases and wait for the next generation 900-volt platform. This shift in buying behavior pushed the demand peak into mid-October instead of December, creating a gap that NIO must now fill through aggressive incentives and limited edition releases. December will be a crucial test, as NIO needs over 45K deliveries to stay on track for Q4 guidance. As for profitability, the odds aren't in NIO's favor this quarter, though the ES8 remains a powerful weapon in their arsenal. Let me know in the comments, do you believe NIO can still pull off a profitable Q4? Or is that goal temporarily out of reach? Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.